Good morning, everyone. This is Bag of Don, Stock Market Caddy. It is July 19th on the weekend at about 10:45 a.m. And I just wanted to take 2 minutes and show everyone what I think is an interesting chart. People talk about the Federal Reserve being in a box, and this is the box. This is a weekly chart going back years. And these multicolored lines are the four major markets. The green line, starting down here from the crash, the green line is the SPY. The yellow line is the diamonds. The blue line is the NASDAQ, and the brown line here is the Russell 2000. And you can see that for the most part the markets move in a centrally planned marketplace, move together. This was the crash of '09. This is where we are right now. Now the white line is the VIX structure, the volatility index, and this is what we have said from the get-go is the market that is targeted by the central planners. It is to crush the VIX. This is where folks it's perceived that the sheep get rattled and unrest comes in the streets. So if they can keep the VIX structure crushed, the markets will respond accordingly. And what's interesting to us is that this is where when the VIX peaked back here in November of 2008, the markets were bottoming in 2008, and now here we are. The markets are actually reaching on a relative basis, the very peak of the VIX structure, and the low of the VIX, after falling some 40% in the last 3 or 4 days, and with the Qs going virtually parabolic, is reaching the very bottom of the markets, the market low, thus setting up the box. This is where folks were shaken out of their retirement monies, and the central planners came in and the banks and scooped up all of their shares, and now they're selling them to them again. The key phrase that folks want to remember is when the VIX is high, you buy. This is where you would have wanted to be buying in the long term. When the VIX is low, which is where it is, you go. When the VIX is low, you go. This is not where you want to be buying, folks. If the VIX structure in just 4 days fell 40%, folks, just the slightest little political zephyr, black swan, brown swan, is going to make for a hellacious volatility spike and what is going to feel like a crash. The reality of it is these markets can come back down into this area here, a 50-60% correction, and it would be normal and the uptrend would still be in place. So good luck, and that is the proverbial box that the Fed is in. Of course, Yellen is oblivious to it until after it unloads. Good luck. Be careful. What will we be doing? Long term, we are selling the market. Short term, we are exploiting the market. What we do day in and day out.